history, and we looked at what happens on average over the next 1 week, 2 weeks, 1 month, 3 months, and basically returns are all above average. So that would point to a continuation of this short-term equity rally here.
This looks at a lot of the technical factors. Great stuff here, particularly when it comes to some of the short-term bursts. You definitely see that in the data. I'm curious that when you look at some of the fundamentals, though, I guess do they matter is more what I'm saying here. Because when you look at sort of PE ratios and some of the more basic fundamentals, they're still relatively elevated, at least based on historical standards.
Yeah, they're definitely still relatively elevated. I mean, they certainly mean something for the long term, but certainly for the short term, the market can, really pull against that. A good example is yield curve inversions. I mean, we're going to make a big deal about yield curve inversions, and it is a big deal. And it does typically lead to recessions, but stocks actually tend to do pretty well out to a year after it first inverts. So these fundamentals do matter in time, but certainly over the short term, we think potentially we could see new highs here before another dip.
But meanwhile, I feel for every time we hear you talking about the technicals really showing that there's a reason to buy, we hear the likes of Morgan Stanley talking about a bear trap. We have the same sort of being uttered by Bank of America. Take the other side of your argument and tell us whether there's credence if you thought that the market was going to go lower.
Certainly there's credence to it. I mean, so when you look at things like volatility, so just the volatility of the market, not the volatility factor like I usually talk about, in bear markets, volatility is typically much more elevated than in bull markets. And we certainly see elevated volatility right now. I mean, like I said, we're up 10% over the last 2 weeks. So just how the market is behaving from a volatility perspective, you would think that we potentially could be in a bear market. And I think that's why a lot of strategists are calling this recent pop a bear market rally.
Really?
All right, thanks there. To Chris Kane. I got it, Taylor.
Okay.
Well, Chris Kane there. Our real early Factor Friday here. Always great research from the folks down there at Bloomberg Intelligence. All right, coming up next, man, we got a lot to cover here. We're going to count you down to those closing bells here, just about 21 minutes away. Big friend of the program, Jason Brady, President and CEO of Thornburg Investment Management, going to be joining us, looking at an S&P 500. It is right around the lows of the day at 45.89 and change. You're looking at a re-embrace of some of those treasuries.
Not a rejection.
Not a rejection.
The inversion that we had
They
yesterday.
Yeah. Well, maybe we go back from is that 2.31? I can't see that.
I know, talk about not being able to see the previous one. I can hardly read what's on the bottom of the screen there, but we are overall seeing a bit of love for commodities too. There we go. Thank you, Mr. Cameraman. Zooming in. Beautiful. 3-month pen. That's what we're looking at there. Just one basis point.
Yeah, I put that up because that's the one everyone looks at. Everyone says that was the one. And look, he said Chris Kane said it was a big deal, right?
Cash Carney said it was a big deal.
In 18 months, T. In 18 months is a big deal.
Where are we going to be in 18 months?
You
Right
should get
here.
your glasses fixed
Right
first.
here.
I should have
Sharing love about the market. This is Bloomberg.